Hello again, fellow BeachBum traders. Thank you for joining us for today's pre-market live stream, where we will go through our 4 a.m. Pre-market preparation, show you what we do in preparation for the 4 a.m. we will open. So thank you again for joining us for today's live stream, and we hope everything is going well for you all. And please let us know in the comments below how your trading week is going this week. I hope you had a great Memorial Day holiday weekend and are refreshed and ready to trade again this week. So we'll get started. So I'm going to bring up our weekly trading game plan for this week, which you can see in our Google Drives folder, Trading Game Plans Google Drives folder. We started putting Google Docs documents containing the notes from our weekly trading game plans, has the links to the various tools that I'm going to use, so that makes it quick and easy to access these various tools for your pre-market preparation. Also, it's got our strategies, etc. for the week. For part ones, part twos have our notes from our watch list. So again, it helps quickly and easily access these. So I'm going to start in FinBiz. Already brought up FinBiz. I can look at the home page. We see how the markets ended on Tuesday, May 30th. We could see it started out down, and then about 10 a.m. They all bounced it. In just my humble opinion, I don't have any evidence to this thesis, but I think the market makers were trying to scare people out, scare the retail traders out early on with a downside, and then they bounced it back up, and it ended pretty flat. However, we can see even though there were some new highs and some advancers, mostly the big fangs, we can see there's still a lot of weakness under the covers. If we look at the news, we can see the hot topic right now is inflation. We saw Biden was out talking about inflation. Biden met with Powell talking about inflation. So I saw poll results too that says right now inflation is the number one concern of the American population. So it's above the pandemic, it's above the war in Ukraine, etc. So the hot topic right now is inflation. We've been talking about this since last fall, right? So we also see quantitative tightenings about to arrive. And again, that's something we've been talking about, the impact of the Fed starting to actually let the bonds roll off their balance sheet and actually possibly selling bonds. Well, we know they're going to sell bonds as well. They're going to reduce their balance sheet. So, and then another piece of news that was notable from yesterday is OPEC's talking about taking Russians' oil out of their essentially their production cap. And I believe, again, this is my opinion, not financial advice, but in my humble opinion, I think that's going to happen because of all the sanctions on Russia. Right now, that's part of their cap, their production cap, so they can't sell anymore. There's excess demand in Europe, etc., because of these sanctions, but the other OPEC members won't sell to that demand because of their cap. Well, if they boot Russia out, then the other OPEC members can fill that at a nice, $160 a barrel price. So I think that's going to happen. I think it'll happen pretty quickly. So we'll see. We'll see if I'm right. So we saw oil run up. It did not break that 130-ish, but it did run up. We'll see if it breaks that 130 or peaks there very soon. Natural gas ahead, it's kind of been bouncing around between 8 and 9 right now. So we'll see what happens there. So, as of 4 a.m. right now, it's looks like it's running up a little bit. So If either of these does peak at their previous highs, does not break their previous highs, peaks and rolls over, then we're going to be looking to short those. We would short oil using either SCO or DRIP, and we would short natural gas further for another scalp using cold, KOLD. We see gold's kind of hovering in the low 1800s right now. And then we can see right now the futures are showing the indices up slightly. And then we saw the treasuries yesterday, the 30-year went above 3, and the other two are hovering a little below 3. So let's look at the indices real quick while we're here. Look at SPY, see where it is. So we can see that little bounce and then a doji. So a doji candle is an uncertainty type of candle. So we could see yesterday was kind of been uncertain. It doesn't, the SPY doesn't know which direction it wants to go, but we can see right now it's sitting between its averages. So again, it's sitting between its moving averages and it doesn't know which direction to go. However, we know the longer term trend is down. So the indications are we're still in a bear market, we're still in a downtrend. This was a bull rally in a bear market. So again, very violent uptick. Last time we kind of saw this, and then we had a couple days. We had a doji / morning star at one point, and then we rolled over for another leg down. So watch out for that similar type of behavior in the SPY. So we'll see if that happens. Look at the Qs. NASDAQ, same thing. And they're all exhibiting very similar behavior. This guy had kind of a little bit of a tweezer bottom, so that's interesting. That's a potential positive sign, but it's sitting below both of its averages still too. Again, doji and decision. And Dow similar. IWM, the Russell. Similar, but a more negative candle from yesterday. So we'll look at the VIX. I know the VIX started to run up a little bit and then it settled back down. So and other people have been pointing out that this 25 area is kind of a recent floor. So it's had a tendency recently to kind of bottom in the 25-26 area and then bounce a little bit. So we'll see if that thesis holds up. If it bounces again around this 25 area, you can see the multiple touches on that line, or if it's going to retrace. So I think a lot of that will depend on the catalyst, what events trigger that might cause some activity in the VIX. So otherwise, its nature is to retrace to its mean, revert to its mean, which means it would continue to go down. So now let's go over to Webull and look at the markets tab. Let's see what's going on. Actually, let's look at the global. Let's see what's going on in the global markets right now. And again, you can see all of this activity, all this, what I do at 4 a.m. in the video in the description box below called It's 4 a.m. Do you know where your stocks are? Also, I think I either released or plan to very soon how to use this globals tab within the markets tab in Webull. So we can see right now pretty much the Asian markets are red. European hasn't opened quite yet, but they were green. So right now we see the Asian markets red. So we'll take a look right when we hit 4 a.m. and see which direction the Chinese tech stocks are going to see if we're going to have an opportunity in yen, YINN, which is China tech up, or yang, which is China Tech down. So let's take a look at yesterday. So we could see we had more decliners than advancers, but it was relatively balanced. The decliners was a small percentage. See heavy outflow out of the NASDAQ, so that's a little bit of reversal from last week, end of last week, where we saw some inflow into the NASDAQ, so we see heavy outflow out of there. Again, you can see the earnings calendar here. So in the short term, we can see we've got GameStop. So, okay, the Reddit crowd, the Wall Street Bets crowd, they'll be all over that. So watch for some of the meme stock to possibly be triggering. I can't recall. AMC may have just announced earnings too recently. So if we look at the best performing industries from yesterday from the markets tab in Webull, see education, that's interesting. That probably has to do with this Biden saying he's going to eliminate $10,000 worth of student loan debt. We'll see how that goes. Financials, somewhat positive. Freight logistics was negative. Electronics a little negative. Food and retail a bit negative. And I think we're going to see when we get over to FinBiz and the sectors tab, it was kind of interesting. Consumer cyclical was up and discretionary or defensive, I think, was a bit down. We'll see when we get there. Look at ETFs. See the current direction. So S Dow down on the Dow. We see yen, so up on the Chinese tech stocks as of the end of yesterday. Oil positive. Down on biotech. Lab D is short, leveraged short on biotech, so biotech down. Gold positive, oil positive, and then Russell short, ultra short Japan. That's interesting. Short. Okay, so Russell, these are very different shorts. Not as familiar with those shorts. I'll have to take a look at those at some point. So again, industries, industrials, community utilities. So the sectors that had been the strongest recently, except for energy. Energy is still very positive. The other sectors that had been kind of strong look negative. Communication services been weak for a long time. Again, we saw some positivity in consumer cyclical. Again, this is a lot of reversal. Basic materials had been positive, was negative yesterday. Technology was still negative. Well, consumer defensive from here was somewhat positive from the industry standpoint. Real estate negative. Commodities soft, so cotton, etc. positive. Commodities positive. Energy. Commodities in general positive. And soft energy. Short-term bonds, iShares, 20-year, okay, so 20-year up, and ultra pro short 20 years, so that's interesting. So they're playing both sides of the bond, so that's interesting. So then let's go over to the sectors. We'll also cover similar data that we just looked at. Here's the sector data from FinBiz and the Groups tab. Again, you'll find another video in the description box below on how to use this Groups tab in more detail. So again, we can see yesterday, some of the ones that were down previously, consumer cyclical communications were positive, and some that were positive. So this is showing energy as negative yesterday, along with basic materials and utilities, all of which have been positive in longer terms. We see the 1 month energy, basic materials, utilities have been positive for the month. So yesterday was a little bit of a reversal, possibly some profit taking. So sell the rip. So you see our title for our game plan a couple weeks ago was, sell the rip. The weekly, again, similar so far. It's been a short week so far, but the month and longer term are energy, utilities, basic materials. So again, we want to stick with that longer term theme. Again, until we see confirmation that we're out of this bear market, we have to assume we're still in a declining bear market. We need to play accordingly. Again, you'll find a lot of strategies in the videos from our prior game plans in the description box below as to strategies that you can use to make money in a bear market. So we can look at industries there as well in a sec. Okay, so if we look at the industries, and we see a little bit of a reversal from recently, real estate, internet, some tech, some retail, auto parts, farm products for the day. But if we zoom out a little bit, so we have some departments, some retail has been positive, luxury is positive. I think we've talked about, I think we'll talk about again in the upcoming game plan is the dichotomy in retail. In my humble opinion, your high end and your low end, your luxury and your discount stores will probably do okay through a recession because your luxury is pretty immune. People with money, it doesn't really matter. They're pretty immune to a recession. But your lower end, I think, is going to move from mid-tier retail to lower tier discount stores, etc. So it was interesting. We've got Big Lots on our watch list, and I saw they fired their whatever VP of merchandising, their head merchandiser. They fired after they messed up their merchandising and missed out on a huge opportunity. Hopefully they'll get somebody in there that can capitalize on the opportunity right now is with the supply chain issues. You've heard us talk about Big Lots. I think they have a huge opportunity given the supply chain issues and the movement I'm predicting down in overall retail. People, trading down to discount retail, etc. So for months, we see a lot of energy, some products, utilities, etc. So that's what pretty much confirmation between the Webull markets, the top performing industries, the markets tab in Webull, and the groups tab in FinBiz. We can get some confirmation, some correlation between the sectors that are performing, the industries that are outperforming, etc. So I like to get that confirmation, see if there's anything different. So just a quick review of the market data, the economic data we got yesterday. So we got housing prices down, which we're again seeing this rollover in housing, residential housing. And we've talked about this for a while. We saw that DRV. I kind of missed it. I don't know if any of you caught it. Please let us know if you caught that rollover in the housing using DRV. But we kind of predicted that a while ago. We're seeing it happen now. So then we had PMI, inflation data, and again it's high. And then we had consumer confidence data, which was a little better than forecast, but lower than previous. So let's take a quick peek and see. And again, highly recommend you keep an eye out on this channel in our Discord, the Surf the Markets channel, where we post this economic data in real time. I'll let that load a second, and I'll also bring up the economic calendar in investing.com. So we'll look at, there's the data for today. So what do we got today? We've got some mortgage, so more about housing. We've got some more PMI data, manufacturing PMI and ISM data. Again, more inflationary data from manufacturing from a supply chain input standpoint. Is we'll see if the front end of the supply chain, if inflation is coming down or not. That should give us an idea of lead time as to how quickly inflation, consumer inflation, could be expected to come back down. Still got some FOMC people speaking pretty regularly, so that can create some volatility if they say anything that's kind of out of line. And then we've got JOLTS job openings, so that may give us an indication if this starts to reduce. They're predicting a reduction, so job openings should be decreasing. Again, we expect that to decrease because we expect companies to start front-running the recession and eliminating open jobs, either just putting them on hold, putting hiring on hold, and we're starting to close job openings. We've also started to hear more evidence of tech stocks doing layoffs. So again, something we've been predicting is, I think, in my humble opinion, we're headed to a recession, and this is the sequence you're going to see in terms of employment. Is first they hiring freeze, then they cut those open jobs, and they start doing layoffs. So, and then those layoffs cascade as companies see potential less demand for their products, and they go through that cycle. So right now we're seeing it in tech and high growth. I've also heard venture capitalists are telling their startups, buckle up, tighten their belts, get their cash flow in line, etc., to be able to weather a recession. So those are all things we're hearing. So again, keep an eye on the Surf the Markets channel in our Discord. We'll post this data as it comes out. So again, you can get this, or you can go to investing.com again and see the data for yourself as well. And you can see the earnings calendar. Here's the graphic for the earnings calendar from Benziga for the week. And again, I post that in the same Surf the Markets channel when I receive it. So here's the earnings graphic for this week. And you can see that Wednesday we've got pre-GameStop. So it's a nice chewy UI path. So you can quickly and easily HP see some of the major companies that are reporting earnings. Then you can see the more detail in investing.com and also in the Weeple's Market tab. So let's take a quick look at the futures before we get to the Webull Open. Again, we have a whole video on how to use this futures tab in FinViz in the description box below, so check that out. What we're really looking for, what I look for personally, is extremes. One of these days I'm going to do a video, I think, titled something about extreme trading. And what I mean is I'm looking for something with an irrational extreme, because to me those are the best opportunities. But again, we can kind of see that kind of indecision in each of the indices here. They kind of peaked. It does look like they peaked. Indecision. Question is, are they going to roll over? Are they going to leg back up? It's not clear at this point to me which direction they're going to go. So we'll have to watch the market. And again, we saw yesterday, you can't necessarily trust that first hour or so, is they might be playing a game. They might push it down and then bounce it back up, or push it up and bounce it back down. So be nimble. There's opportunities in that, but there's also don't get faked out by that initial move. So and then we see the VIX is retracing. So far the indications are that the VIX is going to continue to decline, to retrace. So, and we see the run up in oil, but again, it hasn't really spiked up to that 130 area. So if it does, that's my, as I mentioned, an example of an extreme. You know, if it peaks like that again, I would want to short up at that point, wherever that point is. If it's 130 again, we would try to get another position, additional scalp position, shorting oil using drip or using natural gas. So if we see that spike up over 9 something, 940 or whatever it hit, if we see that type of behavior, we'll do try an additional scalp, shorting nat gas using cold KOLD. See gold and silver kind of bouncing around right now, not really going anywhere right now. Same thing with copper. Other news item is China says they're reopening. That has a tendency to move some of these commodities up, like copper, etc. They're very sensitive to activity in China. So otherwise, most of the foodstuffs haven't really been hitting any extremes recently. They're just kind of bouncing around. See lumber had declined. It looks like it's rolling over. It's headed down, but we've seen it's still relatively high. Looks like coffee's headed back up again, oscillating. And we see all the bonds, they have rolled over now, as we kind of expected. Again, waiting for the quantitative tightening, the selling off of bonds from the Treasury. And we see the dollar kind of bounce. So that also explains some of the activity in the basic materials that are commodities that are sensitive to the US dollar, oil, gold, silver, etc. So that's what we can see from the futures. Looks like we're just about to hit the 4 a.m. open in Webull, so we'll jump over to Webull and we'll check out how the markets are going to open today. So it should be just 4 a.m. Looks like we got some volume starting to show up. So we'll jump over to the, we'll start with the screener, and we'll go over to my hottest screen. This will give us an idea of the immediate sentiment in what's moving right now at 4 a.m. This is, again, one of the reasons I get up at this time. To kind of get look for opportunities if somebody's gapping up, gapping down, which I can also see in Thinkorswim on another machine. Looking for gap up, gap downs, and then also the trends, the sentiment in Webull here. So we can see, looks right now, Baidu, JD, etc. So right now we're showing Chinese tech up, which means YINN, yen should be up and yang should be down. Right now, as per the sentiment, I guess I heard CRM, Salesforce had positive earnings. They're running up a little bit. Shopify is running up a little bit. Palantir, Square, etc. So it looks like a lot of the techs right now, Aurora, Cannabis running up a little bit. So let's see who's headed down. Right now it's just showing NVIDIA, so that would mean semiconductors down. So it looks like Tesla just went down as well. So that's kind of what we can see right now from the sentiment from the hottest screener and Webull. Again, you can see more about this, other examples in these 4 a.m. pre-market prep type videos, as well as our, it's 4 a.m. Do you know where your stocks are video. Pretty much go through this kind of routine. We can refresh the futures tab in FinViz and exchange. You can see there is a little bit of a lag in this data in FinViz. So keep an eye on the timestamp as to when that data is current. So we can see it really hasn't changed. It's showing 353 as data, so it really hasn't changed yet. We can see there's about a 10-minute lag or so in that data. We can zoom in here. And again, you can see more about how to do this in the our video on how to use this futures tab. But again, I can zoom into the 5-minute. Again, the data hasn't really refreshed, but we can see a closer view of it. We can see the run up in oil, natural gas, etc. We can see the bounce in gold and silver. So again, you can zoom this in and out as you want. And we can also see if there's, I'll go to the home page. So we can see as of 3:30, they're saying, stocks are edging higher. We see oil, natural gas, gold. Another thing I like to use at this time is in investing.com. Get that off the notes. And jump over to investing.com. I'm going to bring up the commodities. So I'm going to look at the indices. I'm going to look at the futures. This will give you a more real-time view of the futures. You can see that little time, as long as the time's showing green, that means the real-time updates. I tend to watch this small widget on another machine. So right now we can see the futures are showing up right now a little bit. The VIX right now is showing down, and the dollar index is showing a little bit up. So we see commodities here. Again, this is kind of nice. I like this widget because I can also see this graph here, the trend. So we see oil's headed up around 117. Nat gas is up a bit, 8.4. Gold, silver a little down a little bit. Copper's up a little bit. So again, I like to, and you can just hover over this widget and you can see the graph changes. So again, another nice tool. So, and you can also access the links to most of these tools in the links page on our homepage, BeachBumTrading.com. So please visit us on our homepage as well on BeachBumTrading.com. And if you scroll down to the links categories, again, you can find links to our social media sites, our favorite trading platforms, all of these trading tools. So again, FinBizInvesting.com, some of the other trading tools, if you're not familiar with them, the Sector Spiders, Seeking Alpha, etc. All the various tools that we use to do our due diligence, to do our pre-market prep, etc. And we hope you'll join us in our Discord. You can find an invitation to our Discord in the description box below as well. Again, we post the economic data, the earnings calendar data there, and the Surf the Markets channel. We talk about all kinds of trading related topics, both in the beach party, by asset class, by trading style, by platform, etc. You can get updates to our watch list and real-time alerts in the alerts channels by becoming a member of our Patreon. So we hope you will also choose to consider supporting us via our Patreon. Again, you can find links to our Patreon in the description box below and also on our webpage. So please let us know what you think of these pre-market preps. Are they helpful? Do you tend to trade at 4 a.m.? Is there a better time for these pre-market preps? Do you find this data helpful for your trading day if they're prepared around 4 a.m., even if you don't start trading until market open or 7 to 7 a.m. open? Please let us know in the comments below, in our Discord, etc. if you find this helpful or how we can improve to make these more valuable for you, to help you be as successful as possible in your trading career, which is our goal. So please let us know what you think. I guess I'll wrap this up. I'll take another just real quick look at the Webull hottest screener, see if anything's changed much, but otherwise we'll wrap up. And it looks very similar, still Chinese up. Chinese tech stocks up, meme stocks potentially up. We see some weakness in some of the tech stocks, so it's going to be mixed tech stock wise. We flip back over to the futures. The oil and nat gas still headed up. Gold and silver still headed down a little bit. The indices, now the Dow version is turned up a little bit, S&P down. So again, mixed indecision, etc. So again, we hope this all helps. Let us know what you think, and good luck and have a great trading day. Bye.